We finally got the dark pool print we've been waiting for. Over 6 billion worth of premium between singular and signature dark pool prints right here at 685.84/83. These all came in on Friday. And you can see between both of these, it's about 6.6 billion in premium. It's been a while since we've seen over 5 billion in premium. Over 6 billion is definitely something you want to mark on your charts because this is a substantial print, especially because if we go to previous days throughout the week, for example, you're going to see there wasn't as much premium in comparison to that, like 1.9 billion for one day. That's not that much. And then over here, 1.4 billion, that's peanuts in comparison to something like that 6 billion print. Same thing here, 1.6 billion. So it's been pretty stagnant all of November going into December. And then we finally got this large one here. So I'm going to bring you over to the chart, show you how we're going to use it this week. So first thing I'm going to do is I'm going to draw a line at that level. So we know for the rest of the week, that is where that print occurred. And we know that happened at 685, roughly 83, 84, right around there. And then second, I'm going to go into settings here and change the color of that. Just so I remember this was a dark pool print. It's not one of my other pivots. I like to choose purple since that's how it's displayed on Chatterflow. Now, we know that this level is going to be key throughout this week, especially on the initial retest, either end, depending on where the gap is come Monday. So now we want to develop some form of a thesis on how to trade this either from the short term because it acts as a good scalping metric intraday, but then also for a potential swing bias as well. Now, what I'm going to do after that is not just use this level by itself. I'm going to use some other areas of interest based on gamma to derive a potential bias as well. We call this stacking, using different variables in conjunction with each other to allow you to have a nice setup, a robust setup that's going to be profitable ideally in the end. So going to Twitter, we can see over here that there are a couple posts from Chatterflow on Gamma last week, especially end of last week, specifically this 685 call wall that formed. It was 1.7 billion at the time, and I think it actually went up to 2 billion. I'll have to check that here in a second, but you can see their message. If bulls can break above, there's a huge opening to 690 and then 700. And you can see here based on Gamma, in this case, 1.7 billion at that 685 level. At the time, spot price was below, so it was kind of trending up to it. And this was a level that they kept posting about all the way back in the 670s because there was a ridiculous amount of exposure that was growing here, and that can sometimes act as a magnet for price to reach it eventually. So we had that post over there. And then later on, as you can see, there was actually some nice confluence in 700 strike calls on the S&P 500. So 1.2 million worth here. You can see both of these prints, and this expires in about 6 or so weeks. So not like it's far dated at all. Decent amount at the money in terms of the expiration they chose. So there is some bullishness there. We could pair that with something like Gamma, and then going up a little bit further, we can see bulls are doing a huge $2.6 billion call wall formed at 690. And this is the last level before 700 unlocks. So this 685 to 690 was showing a ridiculous amount of exposure, far more than we had seen on arbitrary whole numbers, if you want to call it that, in previous levels. So 2.6 billion was substantial, and bulls were unable to get above this. They actually fell back down to retest that 685 level. So we know a couple things from this. One, that 690 has to breach for that run, kind of rally in a sense, to 700. And we also know that 685, because of this previous post over here, must hold as a support. Otherwise, bulls are going to see a bit more difficulty, probably more chop like we had seen in the previous week, or some more downside in the near term. So they want 685 to hold. They need 690 to break. And now if we go back to the chart, we have another level that'll give us a bias of 685.83. So that tells me going into this week, if we are to see something like a gap up, let's say on Monday, and we see it gap up anywhere around this range, my risk or potential entry as well off of a gap up is now this area here, because we can see it come down to retest, and this will act essentially as a demand zone between both key levels, both 685 because of the amount of exposure there, but then also 685.83 because of the amount of premium in terms of signature dark pool prints. This is a loading area, and a breakdown below here, like around, let's say 684, for example, down to 683 will be the risk of that. So risk is down here of this setup on a hypothetical gap up, because remember, we always have to look as traders into potential scenarios for the week ahead. We don't know where the market's going to open, but we can be prepared for whatever way it does open. If it opens up here with a gap up, or maybe mini gap up, comes down to retest within the first hour, you want to see it bounce from there, some type of response, and then we can see upside to that 690 up here that I was referencing before based on those posts. And this will have to be overtaken by bulls in order for 700 to unlock, and probably within a quick fashion as well if they're able to get it above here. So that's one scenario. Now, the second one over here is, let's say we have a gap down. Maybe there's some weakness going into the week ahead. If there's a gap down, there's no reason for me to add longs until this level reclaims back above here. And I'll get rid of some of this to make it more clear for the second scenario, as you guys already know the first one now. But going into this week, if we were to have that gap down, like I said, then you want to see something like a retest and reclaim over, ideally on an hourly. I'm not watching the minute chart, guys, the 5-minute chart, etc. You guys already know this. You've been watching the channel long enough. I'm looking for minimum 15-minute confirmation, but in terms of these levels we're using here, just because they're so thick, you want to see hourly candle confirmation above or below to either stop out or to enter that position. So that's what I'd be looking here. Otherwise, it can come up, maybe even go up over on the 15-minute, but then reject by the hourly and come down to retest this level over here, another previously key gamma level, which was 680, as well as, if we go to the daily chart, this very key uptrend at the same time, the one that goes all the way back, just accidentally drew that line there, but the one that goes all the way back to August 1st, it's been within that uptrend for quite a while, broke down below for a small pullback here, but now recently reclaimed it. And so far, it looks like this over here is acting as accumulation before higher. However, we have yet to have decisive confirmation above this range in between 680 and 685, which ironically are those key gamma levels I was mentioning. We've yet to see clear confirmation like a strong candle above to promote that upside move, which the target, at least estimated target, would be about 700 of. So this is kind of what we're looking at right now, because there's a lot pointing to the bullish side, whether it's the fact that we're holding 685 of the support, and then potentially could even hold this 685.83 level, and then also those 700 strike calls and the amount of exposure above, etc. However, things still need to pan out, because who knows, maybe it is bullish eventually, but we come down and it maybe gaps down come Monday and it wants to retest 680 one more time. Well, if you add it up here, you're going to be in a lot more pain at 680, or maybe an extreme move to wick under the previous range over here, and you see 678 to liquidity grab everybody from this range, then that's something you're not going to be as comfortable holding at that point. So it's always key to make sure we have confirmation above/below the levels, depending on if you want to be long or short. So that's what I'm looking for on the S&P 500. And there's also one final thing I'll mention on the chart here, which is there's a similar characteristic to this move in terms of its impulsivity, if you want to call it that, how impulsive the move is so far, and the entire structure to what we saw in 2023. And I remember trading this vividly. If we go back to 2023, some of you guys might remember it as well from the YouTube videos, but we had during this time period, I actually went a bit too far. It was over here, fall of 2023, October 27th was that bottom. And as we went up here, we had accumulation after an impulsive move from lows. So we know this low was impulsive because we had a gap up and go over a weekend too. And then it continued to go from there, another gap up and go, another gap up and go, another gap up and go here, all in a row. That shows how impulsive it was. All these shorts that piled on due to hedging or maybe even directional are now getting squeezed out. And we had consolidation, which acted as accumulation in this zone. So this zone right here acted as accumulation. We finally had the breakout candle here because it went above the zone. Roughly speaking, with this sketch, we had a daily confirmation breakout. Next day acted as balancing, and the following day was a huge breakaway gap that set the scene for much higher. This would be very interesting to see because this is very similar, impulsive from lows, where you have a lot of bearishness going into it. You have the gap up the following day, and then continuation, followed by consolidation that acts as accumulation, and then continuation much higher thereafter. So this scenario, if I go back to where we are right now, is actually very similar. We just need that confirmation, decisive confirmation of that candle above the range, because as you can see here, we're impulsive off the lows. We have a gap up and go. Over here, another strong candle, then another gap up and go, followed by consolidation, which could act as accumulation if we have that decisive breakout. And if that is to be the case, you're going to see 700 very soon after. It's just a matter of waiting for that ideal entry. So there's your entire setup for the week ahead. Hope you guys enjoyed that segment. Going back to the flow, this will be the last thing that I mention, is the amount of unusual call flow on Tesla. All of last week and the previous week, it's getting actually insane that we've seen so far. This is actually the only bearish print that I've seen that was notable. Definitely a lot of premium, 12.3 million for the 440 strike, but it does have a further expiration, all things considered, compared to what we've seen previously. For example, 12/12, this is this upcoming Friday. It has a 490 strike despite trading at 455 at the time that they bought it, and 2.1 million in premium, along with a couple put sell orders here below and at the bid for much further dated expiration. So this was very interesting, highly unusual, flagged as highly unusual on Cheddar Flow just because it is highlighted here in blue, and the strike relative to the expiration is super unusual. You do not see that often here. And that's not all. If we go back to the historical flow tab to see back in time what happened here, we go to Tesla, for example, and we can see that there was a variety of other super unusual prints. For example, 500 call here that expires in 1 month from the time that they bought it for 1.2 million in premium. Bought it at the 448 spot price, so definitely ways away from where they bought it. 450, a strike over here for 1.1 million. You can see 82.8% call flow to 17.2% put flow. So across the board, super bullish as of now. This one was ridiculous. I showed you guys this in the Wednesday video. 12.9 million in premium for a 550 strike that expires in January. So this expires in about 6 weeks from the time that they bought it. They bought it at a 443 spot price for a 550 call. Doesn't mean that it has to go to 550 for them to profit, but they definitely expect a very substantial move in a very quick amount of time based on how much premium they have behind it and the strike that they chose. So some crazy prints we've been seeing on this name, as well as some insane dark pool prints as well, like 510 million. That's a decent amount for Tesla, like pretty sizable at this 446.74 level here, 250 million, 195 million. So these are some sizable prints hitting the tape. Another 500 plus million one here for 446.74. So there's a lot of interest on this ticker right now. And I'll go to the chart just to show you one more thing. This is setting up for a nice Wyckoff accumulation pattern. I showed you guys this in the last video as well, right as we had this nice breakout candle, a little bit above 440. And as time goes on, this looks even more ideal just because of what we had over here. This acts as accumulation, followed by even more accumulation down here, which acts as a double bottom as well. And now it is starting to rally from here. I see this going up to around 465, which is a key downtrend that goes up to the previous all-time high and the previous highs here. And above that, you guys are going to see 500 very quickly. So some insanely bullish setup so far. Obviously, you need to make sure it gets above. As I said earlier in the video with SPY, same thing here. It needs confirmation above that level, but I honestly think it's only bullish above 439.97, which is my pivot, my preference. I'm going to continue to hold this as long as it gets up to this 465 level, trim around there, and then it can rip as long as it wants to afterwards, just because it is clear skies above that level. Now, that is everything from me today. As always, appreciate you guys watching this video. I'll see you next time.